Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon and my co-host here, Brian Fernandez. Let's start by taking a look at the summary of market actions today. Brian?
Now, the sharp fall on Wall Street last Friday was driven by non-farm payrolls data that fell short of expectations. Now, this has been increasing worries that the Fed may keep interest rates elevated for too long, hindering economic stability. Now, additional moderate economic indicators and mixed earnings reports from major technology firms further impacted U.S. markets, now leading to weak guidance for regional stocks. Now, however, Asia was hit largely by concerns today of deteriorating economic conditions, prompting investors to seek safe havens like Japanese yen and gold. Now, losses in Chinese markets were comparatively smaller today. In fact, Shanghai Composite was only one in the green, up by 0.07%. Hang Seng Index saw a 0.34 decline. However, private purchasing managers index data indicated a slight growth in China's services data in July, which helped to improve sentiment following poor manufacturing data the previous week. There's more important Chinese economic data expected later in the week, including trade and inflation data. Now, Australia's ASX 200 fell 3.39%, with market attention shifting to a Reserve Bank of Australia meeting tomorrow, which is widely anticipated that interest rates will remain unchanged. Now, Sam, over to you for the rest of the updates.
Thanks, Brian. So over in India, the futures for Nifty 50 suggested a negative opening with expectations of more profit taking after the Nifty reached record highs above 25,000 points last week. Over in Singapore, the STI is down 3.09%. In Malaysia, the KLCI is down 2.75%. Over in Japan, the Nikkei 225 dropped by 9.24%. In fact, it has been dropping for a while now. The index was trading more than 20% below the record highs achieved in July, pulling them to a verge of entering a bear market if they do close below the current levels. So Japanese stocks were affected by significant profit taking, with foreign investors withdrawing as the Japanese yen strengthens. This trend was influenced by the Bank of Japan's hawkish stance as the central bank raised interest rates and also signaled for more potential hikes in 2024. So we also had moderate earnings from major automaker Toyota, and that has really set a negative tone for the Japanese market. So we also have key earnings report from Sony and SoftBank Group expected in the coming days. Over in South Korea, the Kospi is down 7.63%, extending its losses due to weakness in tech stocks. And this sector was impacted by profit taking as well as the moderate earnings from major US tech firms. So that's all I have for today's market updates. Brian, back to you.
Now, to bring greater insights into the market conditions today, we have Tim Watra, Chief Market Analyst at KCM Trade, coming to us out of Sydney. Tim, great to have you on the show today.
Hi, Brian. Hi, Sam. Good to be with you again.
Likewise,
Okay.
Sam.
Yeah, good to see you again, Tim. So just to start this off, we've already shared a lot about how there has been like sell-off in the global markets. Maybe you can share a bit about that, particularly in Japan, Tim.
Yeah, absolutely. Yeah, not your typical Monday. What we've seen so far is a lot happening, and I guess you can really trace it back to that BOJ action that you mentioned from last week. That might have been what set the dominoes off with that, in some quarters, unexpected tightening from the BOJ. And what we've seen since then is basically a 10% move downwards in that dollar-yen rate. So a lot going on there, a lot of different dynamics at play, but essentially it's a lot of repatriation of that yen, a lot of closing out of short yen positions, and that's causing a lot of this market turbulence that we're seeing, particularly in the Nikkei. We saw what happened late last week and again today. So that stronger yen not going down so well, certainly with the Japanese market, in particular the Japanese export sector. So, I think I'd be, a penny for the thought of what the BOJ and the monetary officials are thinking right now. I mean, they weren't happy when dollar yen was up at 160, and now sort of, sub 150. They're really happy with it now, given what we're seeing in terms of the repercussions for the market at the moment. So that's something to watch going forward, I guess, is, how long does this unwinding of short yen position go on for? But it could be a little bit further to go yet. So a lot happening there. And of course, we saw the non-farm payrolls figure in the US last week. So that also threw another spanner in the works as well, you might say.
Mm-hmm, mm-hmm. So how about commodities, Tim? What's happening there?
Yeah, so commodities space. So we saw gold initially rally on Friday, then came off on some profit taking. We saw gold this morning. It started off on the back foot, but since then it's been gaining a bit more traction. And I think that's because the fundamentals right now are supportive for further gains in gold. So, and by that we can point towards that US dollar, which has been weakening on the back of that NFP result on Friday. So markets are now strongly pricing in up to 3 rate cuts by year end. So we're seeing the yields fall on the 10-year and the 2-year notes in the US, and that's bringing the US dollar down with it. So that's helping the gold price become more attractive, particularly for offshore investors. And of course, we're also seeing this safe haven play as well. So that's also benefiting the yen. It's also a bit of a double whammy there for the Japanese currency, higher rates, and also receiving that safe haven flows because of that market turbulence that we talked about. So if we're talking about that in terms of currency circles, then yes, the traditional favourites there are the yen and the Swiss franc. Outside of that, in the metal space, that's where gold tends to shine, pardon the pun, and that's what we're seeing at the moment. So gold does seem poised for another potential run back at that $2,500 level in the near term, particularly if this US dollar weakness has an extended stay. And we do see these safe haven buying flows, which have been pushing it north today.
Now, Tim, this is a very turbulent start of the week. I mean, the Nikkei is down just under 10%. The Kospi is down just under 8%. What are market actors looking for the rest of the week? We've got some key data out this week.
Yes, that's right. A lot of things to look out for this week. I mean, first and foremost, I guess, looking at tonight in the US. So we saw weaker manufacturing data in the US last week, well below that key 50 level. And of course, the weaker jobs figures as well. Tonight, we'll get the services PMI readings. So expectations are we will see that one come in north of that 50 level. So I think if markets get maybe a reading there of 51.5, 52, that could stem the bleeding a little bit. Could offer some assurance that we maybe aren't necessarily going to a hard landing, but let's see what the number plays out like this week, tonight, for example. And of course, we've got some Fed speak coming up. And you mentioned, of course, the Chinese inflation figures later on in the week as well. Obviously, China's still teetering on that sort of, the brink of that deflationary level. So that'll be a key one. Some better numbers out of China today. That was good. Obviously, that's helped prop up the CSI 300 and also the Hang Seng as well. But markets will be hoping to see some better numbers from a risk appetite point of view come Friday with the CPI and the PPI. So, in terms of the US, I think it's just trying to gauge where we are at, and what will happen in September. Are we going to see 25 or 50 basis point cut from the Fed? Of course, there's a lot to play out between now and that September meeting. So it's a bit hard to call that at this point, but I think whilst ever markets remain concerned that the Fed isn't acting quick enough, and while we get some earnings misses like the ones you mentioned, of course, the news from Intel on Friday about the layoffs, that's what's creating this angst in the market at the moment. That's why we're seeing this flight to safety and investors taking risk off the table at the moment.
Okay, thank you so much, Tim, for coming on the show today.
My pleasure. Good to be with you.
So I've been speaking to Tim Watera, Chief Market Analyst at KCM Trade. This has been BizTech Asian Midday Market Watch. Be sure to keep informed with the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, and our social media platform. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.